Hello viewers and welcome back to Dukascopy TV. I'm Natalie MacDonald. Now, unless you have been living under a rock, then you will be aware of the ECB's monetary policy decision last week. But what impact will this have on the financial community itself and also fund management? Well, here to talk this through with me in a little bit more detail is Benoit Derwael of Pentagram SA. Benoit, thank you so much for coming in today.
Hello, thank you, Natalie.
No problem at all. Okay, so firstly, let's recap on the ECB's decision itself. What is the investment community's take on the central bank's reduction of the main refinancing rate? And similarly, what are your thoughts on this newly imposed negative deposit rate?
Okay. First recap, the ECB decided to cut the rate from 10 basis points to 25 to 15 basis points. And they also decided to cut the deposit rate. And it's the first time that we are on negative territory, on minus 10 basis points. They do something differently also. They announce targeted LTRO is quite new, and we'll see the impact of the market on future. And the last things they announced, they will work on the structured product is ABS solution to protect the investment. I would say that the community expects something after the pressure that they have since 2 or 3 months, and certainly with the bad figures last week about inflation at 0.5% in Europe, they didn't need to act so much. And then an intervention like that is very appreciated by the market, in my sense.
European stocks extended to fresh 6-year highs in the 24 hours following this decision, followed closely, we should probably add, by US stocks also. With the dust settled now, as we've kind of moved on to this and as the financial sector does kind of continue to process this decision, what performance do we see now and also heading into the future?
Yeah, indeed, if you take a short track from 5 years, it's very impressive. A lot of study about long-term cycle. It's very, we are probably on the top 5 longest rally. First of all, I will say that don't fight the central bank. That probably will, with the easy money, will probably see further increase of the European market. Second thing, if you take a little bit back on some ratio, we saw that the S&P and the Eurostock 50 are around plus 6% year to date. It's good, but it's not so expensive. And first of all, the earning price is around 16 in US and 15 in Europe. Then again, it's not, we are not in surexpositive positioning. And if we see the market since probably 8 months, we see some like a V shape, and that we probably on the short term have a small correction after this close rally, but we expect more 6 to 5 to 10% from the end of the year, more than today.
So let's consider then perhaps maybe how this is trickling down into the financial community's everyday activities. How are these policy and indeed market movements impacting your fund selection activity in what you do in a day-to-day being?
Yeah, we saw that the market is a little bit nervous, probably not in the VIX or of the sentiment, but probably on the top of the market. And then we move a little bit our investment through a long-short manager, and also some, and it's very manager that we like, it's a value manager. Then today it's still possible to find some good company with good cash flow, with a strong growth, and probably also we select also 2 small thematic that we think that profit of the current environment is the temporary work environment like Adecco or Synergy, and also probably in high-tech stock, something more specific about the payment by your phone, mobile phone, with near-field communication with different company like Insecure.
Having said that, I mean, we have clear central bank policy now from the Fed, the ECB is on a clear path, yet appetite for risk still remains patchy, as it were. How does this in turn impact your portfolio allocation into the latter half of 2014?
Yes, as I mentioned, we try to work with some long-short manager to take the 2 advantage of the 2 sides, even if they missed the great rotation in March, April. And the second thing, as I mentioned, the VIX is very, very low. Then the option to cover your portfolio is very, very cheap. Before it cost around 1 to 1.5% a year, and today it costs around 70 basis points to cover all your portfolio. And then our strategy to be long equity, European equity mainly, and to have a protection for half or 2/3 of the portfolio through option at 10% of the actual market.
Benoit, thank you so much for coming in and putting these decisions into real terms almost. Thank you.
You're welcome, Nathalie. Thank you very much.
That's all we've got time for right now, but do stay tuned to Dukascopy TV for all of your latest in FX analysis and news. Goodbye for now.